Looking at the two-column cash book. The two-column cash book, also called the double-column cash book. So recall that we talk about the one-column cash book where we record transactions through the bank and transactions in cash in separate books. But in the two-column cash book, we record both transactions through the bank and transactions in cash in one book. The double column cash book records all receipts on the debit side and all payments on the credit side. Just like the one column cash book, the two column cash book also records the date of the transaction, the description of the transaction, and the amount of the transaction. But in two-column cash book, you are recording your cash transactions and your transactions through the bank. In the debit side, if the receipt, if it is a receipt item, and then the credit side, if it's what? A payment item. Remember what I'm saying. I am saying that in the double column cash book, your receipt side has two columns, cash column and bank column. Your payment side has two columns also, cash column and bank column. All the receipt in cash goes to the cash column of the debit side, which is the receipt side, and all the receipts through the bank goes to the bank column of the debit side, which is the receipt side. All payments in cash goes to the cash column of the credit side, which is the payment side, and all payments through the bank goes to the bank column of the payment side, which is the credit side. Now, in preparing the two-column cash books, we have the first method, which is called the vertical method. It is called vertical method because it flows towards the what? Towards the vertical side because of the fact that it is not trying to put one on the right side and the other on the what? Left side. It's trying to record everything simply flowing together. From this format here, you can see that we're having the date, the description, the debit, which is the receipt, immediately followed by what? The credit, which is the what? Payment. As you can see, the debit here, we have two columns, cash and what? Bank. You see the credit here, which is the payments column, we have cash and bank. As I said earlier, any receipt that has to do with what? Cash comes to the cash column. Any receipt that goes through the bank comes to what? The bank column. Any payment that is in cash comes to what? The payment side, which is cash column here. And any payment that goes through the bank comes to the what? The bank column. Now, the second method is called the T method. As you can see, it's like a T with two sides, the right side and the left side. The right side is called the credit side, which is also the payment side. And the left side is called the debit side, which is also what? The receipt side. In the right side, which is the credit side, you have the date, description, and the amount. And the amount here, we have cash column and bank column. Cash column for payments in cash. Bank column for payments through the bank. The left side here, you have the debit side, which is the receipt side. We have date, description, and the amount. And the amount here, we have cash column for receipts in cash, and the bank column for receipts through the bank. Now, this is an illustration for the vertical approach of preparing the two-column cash book. Now, we're using the same business owner, Mr. Yaovi. These are his transactions for the month of January. So we are preparing two-column cash book for him. So we have first January opening cash at hand. So we already know how the vertical approach is. We have the date, the description, we have the debit, which is the receipt side, and then the credit. The header Here we have two column cash book for the month of January 2020. Mr. Yaovi, the owner of the business. So 1st January, we have opening cash at hand. It's a receipt, money flowing to the business. So we have debit here under cash column, 500,000. On the same 1st of January, we have opening cash in the bank. This 1st January, opening cash in bank, under the bank there, 1,500,000. Don't forget to know that sometimes some questions might use started business. Some will use opening capital. They are all trying to say the same thing. They can tell you that Mr. Yaovi started business amount of money in the bank. They might not come out straight and say opening cash at hand. They might tell you that he started business putting some money in the bank. It's the same thing. They can tell you that opening capital is this. It's the same thing they are trying to tell you. But you have to just be able to establish the fact that it is related to cash or what? Bank. So that is it about the opening cash at hand and opening cash in bank. The next transaction says 4th January, purchase goods in cash, 250,000. So you see 4th January, purchase goods in cash. If you're purchasing, you're paying. So it is going toward the credit or payment side under cash, 250,000. We have 8th January, sold goods for cash, which is C equipment, paying by check, 500,000. So we have 6th January, bought equipment, paying by check. How much is that? 5,000. That's the bank column there. And then the next one, 8th of January, sold goods for cash, 280,000. So we have 8th January, sold goods for cash. It's a receipt. That's it here, 280,000. Then we have 10th January, sold goods, receiving check for payment, 270,000. So we have 10th January, sold goods, receiving check for payment, 270,000. That's the bank column. Then the next one is 12th January, purchase goods, issuing check for payment, 370,000. So we have 12th January, purchase goods, 12th January, purchase goods, issuing check for payment. So it's a payment, so that is why it is under the what? The payment column there, 370,000. So on the 13th, paid for rent in cash, that is 60,000 under the payment column, 60,000. So all the way from 13th to 15th, we have 13th paid for rent, 14th paid for wages, 15th paid for repairs. They are all payment. So they are going to be the payment column there. So you can see there 13th January, 14th January, 15th January. So they are paid for rent in cash. That's the value there. Paid for repairs in cash. That's the value there. Then the next one is 15 paid for repairs in cash. That's the value there as well. And then on the 16th, they said sold goods for cash. When you sell, you receive payment. So it's in the receipt side there. So we have 16 sold goods for cash. And that is how much? On the 16th, we have 200,000. So on the 17th and on the 19th, 17th we purchased goods paying by check. 19th we bought furniture paying by what? Check. They are all payment. They are both going to the payment side. So as you can see here, 17th bought goods paying by check. 19th bought furniture paying by check. So they are both going to what? The bank what? Column. So that's it for those transactions. So we have on the 20th paid for machinery by check. That's payment. It will go to the payment column, which is the credit there. You're paying for machinery. And then the next one, 21st, receipt check for goods sold. It's on the receipt side. So we have received check for goods sold. So if you receive check for goods sold, that will be under the bank column because you're receiving. The next one is 22nd, bought goods paying by check. Remember, when you buy, you're paying. So 22nd, bought goods paying by check. So that is under the credit column here for bank, 300,000. So on the 23rd, received check for goods sold. So that is the receipt side here. We have 23rd, January received check for goods sold. That is 145,000 under the bank column here. On the 24th January, paid for stationaries in cash. That's payment. So 24th January, paid for stationaries in what? Cash. That's 32,000 and what? The cash column. Now that is the last transaction. So what do? We balance up. What I mean by balance up, we want to establish the amount that is left in the bank account and the amount left in the office as cash. So what do? We compare the receipt side of the cash column with what? The payment side of the cash column. That's the summary here. Debit here is for receipts. Under cash, total amount received is 98,000. Credit here is payment. Total amount was paid is 402,000. So when you minus 402 from 980, you have 578. That is what you have here on the last day, which is saying closing balance or balance carried down. They are the same thing. So in cash, we have 578,000 remaining. So this 578 here, that is the balance carried down or the closing balance, is the difference between the total cash received and the total cash paid. And then for bank as well, so the bank on total receipt, which is debit here, is 2. Total receipt here is what? 2,095,000. Total payment is 1,770,000. The difference is 325,000. That's the closing balance here under the bank column, 325,000. So what we are trying to say is that what? At the end of the month, we have 325,000 left in the what? Bank. So what do? You add up everything and make sure what? It is all agreeing. So the following month, which is February 1st, you are opening your cash with 578,000 and you are opening your bank with 325,000. As you can see here, February 1st, we have opening balance 578 and 325,000. So the next illustration here is the T approach. I already explained the T approach to you. It's like a T. The right is what? Payments or credit. The left here is what? Receipt or what? Debit. So let's look at the transactions, just like what we solved in the vertical illustration. We're using the same question to solve it. We're using the same question and then solving it using the T approach. So we have 1st of January opening cash at what hand? 500,000. 1st of January opening cash in bank 1,500,000. So we have the receipt side here. 1st January opening cash. See cash here, 500,000 in the office. In the bank here we have 1,500,000. 4th of January purchase goods in cash. That's a payment. So it goes to what? The credit side there. 4th January purchase goods in cash. Under the cash column here, 250,000. On the 6th January, bought equipment paying by check, 500,000. It's a payment. So come to the credit side. 6th January, bought equipment paying by check, 500,000. On the 8th of January, sold goods for cash, 280,000. When you sell, you're receiving. So it comes to what? The debit side here. 8th January, sold goods for cash, 208,000. Under the cash what? Column. On the 10th, sold goods receiving check for payment. It's also a receipt. You see there, 10th, sold goods receiving check for payment under the bank what? Column. On the 12th, you have purchase goods issuing check for payment. When you purchase, you're paying. So you have 12th January purchase goods issuing check for payment, 370 370,000. On the 13th, you can see 13th, 14th, 15th, they are all payment. Paid for rent in cash, paid for wages in cash, paid for what? Repairs in cash. They are all paid, so they are all going to what? The payment column here. We have 13, 14, 15, paid for rent in cash, as you can see, paid for wages in cash, and then paid for repairs in what? Cash. So that's the value: 60, 40, 20,000. So on the 16th, we have sold goods for cash. When you sell, it's in the receipt side. So we have sold goods for cash, 200,000 under the cash column. On the 17th, we have purchased goods paying by check. 17th, yeah, it is 17, purchased goods paying by check under the what? Bank what? Column. That's 130,000. 19th, bought furniture paying by check. When you buy, you're paying. So you're going to the credit side as well. The payment column. Bought furniture paying by what? Check. That's there 220,000. On the 20th, paid for machinery by check. It's the same payment. So we have 20th here, paid for machinery by check. As you can see, it's 250,000. So when you have the next one here, which is 21st January, said received check for goods sold. That's a receipt. So we have received check for goods sold, which is 180,000 under the bank column because it is check. And then we have 20. So we have 23rd, 22nd, bought goods paying by check. That's payment column or the credit column there. Bought goods paying by check. So it's going to go under the what? The bank column, 300,000. On the 23rd, received check for goods sold. So it's a receipt. We have received check for goods sold, and it's a check under the bank or column, 145,000. On the 24th January, we have paid for stationeries in cash, 32,000. That's what you have here. 24th January, paid for stationeries in cash, 32,000. So after the entries, what do? We balance up the book or to know our closing balance. I already told us just the same way we balance up the vertical cash book, the same way we balance the T cash book. We're still the receipt in cash against what? The payment. So as I was saying, we're comparing what? The total receipt in cash against the total payment in cash, so we can establish how much is remaining in the cash and in the bank. So for the cash here, this is the debit, all the cash column here. The debit here total is 980,000. You can add this with this with this, you have 90,000. And then the credit, which is the payment, that's the cash column here. Add this, and this won't be there. This is what you're trying to calculate. So before you arrive at this, you have to add this, and this. I mean 250,000, 60,000, 40,000, 20,000, and 32,000, and take it out of the 980,000. When you add all that together, you have 402,000. The difference is 578,000. That is the closing balance you are having here. So you're saying at the end of the month, you're having a balance of 578,000 naira cash in the office. The same thing goes for the bank. You want to know how much is left in the bank account. That's comparing the total receipts. All this here, 1.5, 270, 180, 145 gives us 2,095,000. You also try to add up all the payments: 500,000, 370,000, 130,000, 220,000, 250,000, and 300,000. The total here is what? 1,770,000. The difference is 325,000. And that is what you have here as the closing balance. So it means at the end of January, Mr. Yaovi has 578,000 naira as cash in the office and 325,000 as cash in the bank. So it means that in the following month, February 1st, opening cash will be 578,000, and then the bank you have 325,000. This is how to prepare the two-column cash book using the T approach. Remember, what we are doing is simply recording cash transactions and bank transactions in one book. The transaction is a receipt, it's debited. With a payment, it is what? Credited. In the receipt column, you have two columns, cash and bank. In the payment column, you have two columns, cash and what? Bank. Cash column in the receipt side is for what? Receipts that are in cash. The bank column for the receipt side is for receipts that are what? That went through the bank. For the payment side, the cash column for what? Payments made in cash, and the bank column is for what? Payments made through the what? Bank. Remember, the receipt side is also referred to, in fact, it is called the debit side, and then the payment side is called the what? Credit side. We have two approach. We have the vertical approach and we have the T approach. Now, I will encourage you to go through the questions. You can pick up past questions and solve past questions. If you have questions, you can reach me on 08136506356 or send me an email, jeremiah.dosu@gmail.com, or you can drop questions in the comment section and then I'll be there to reply with the answers. Thank you. See you in the next class.